This is just mind-blowing. This was the biggest ATM announcement in history of the capital markets. So 21 billion was announced. Bitcoin went down on the day and his stock price went up. So it's absolutely insane. And this was the moment where obviously everything changed. That's non-intuitive. We're investors. We look at equities. We go, okay, if you're diluting your equity, then you're increasing the amount of shares. You're debasing the value essentially of the shares, right? So what he's doing is actually...
Richard Byworth, a seasoned convertible bond trader, currently works at CIS Capital as a managing partner,
overseeing the liquid alternatives business. As the former CEO of the NASDAQ-listed crypto ecosystem company Econex Group and a committed Bitcoiner, Byworth is well-positioned to provide insights into the capital markets strategy employed by Microstrategy.
Is it the case that the assumption really is that Bitcoin is going up, or would you say even if everything stayed flat right now, it would still be accretive?
Even if nothing happens, he's increased value per shareholder. But what's likely to happen, the interesting thing was that this is bringing in a lot of traditional finance investors. You think about the convertible bond desks. Imagine all the convertible bond desks that are out there in investment banks that are now trading this product, that have all had Bitcoin thrust in their face by MicroStrategy.
Some people were also kind of questioning this strategy. So my question is there any type of liquidation risk here as well? And how likely is it that this trade could unwind and truly, fly in the face of the entire Bitcoin and crypto industry? Hey, Richard. I hope you're doing well. Great to have you on the podcast. Very nice. You and me, we met, I think, a few months ago only, but it was always interesting to follow what you've been doing. And it's great to finally have you on the podcast.
Very nice to be here, Pascal. Thanks for having me, and excited about the chat.
Yes, exactly. Well, we were kind of chatting offline, saying, well, I was looking for somebody who could explain the MicroStrategy story a little better, and then, you actually came to mind, but maybe you can elaborate on why you are the perfect guy probably to talk about this, since I think you have a background in the things that are relevant to the discussion. So if you could elaborate, that would be great.
Okay, yeah. So first of all, I should make a couple of disclaimers. We at CIS Capital are not allocated to MicroStrategy. We don't hold any of the instruments at all directly. We may be invested in some of the hedge funds that hold the convertible bonds. And I personally have a holding of MicroStrategy stock, but obviously everything that we discussed today is in no way promotion of the stock or any kind of thing like that. So I'll start by just introducing my background. So I started my career in London as a trader, and actually I was trading convertible bonds from, my first day out of college, essentially, in Nomura, in London, where I was running a market making desk for Japanese convertible bonds. And that really got me au fait with the product. I didn't obviously start trading from day one. I was learning for a while and learning what this product was, because, what you learn in the textbook is very different to the way that it actually trades. And for those who don't know what a convertible bond is, it's essentially a hybrid instrument that at one point in the stock's life becomes more of a bond, depending on where it's sitting in relation to its conversion price. As the stock goes higher and higher, it becomes more and more equity-like. So there's that middle portion, which has optionality and gamma around it, that is like trading options. So you've got this blend between a bond and an equity. And so this is just really important to understand that this is quite a unique instrument. It's a fun instrument to trade. It's a fascinating product to hold as an investor, and to trade around. So I basically started, as I said, as a young trader in London, trading this book. And then after about 4 years, I moved to Tokyo, where I built the convertible bond business in Asia for Nomura. It was obviously based on Japan, which was the biggest market at the time. Nomura is a Japanese investment bank. And we ended up being the number one house in a very short period of time. Goldman Sachs had been the number one house before us, but within just 5 short months, we quickly took the number one spot. And that was largely because we had a very strong issuance pipeline. So people always want paper. If you imagine that there are convertible bond hedge funds out there, they always want to be buying these convertible bonds. They want to get issuance in the new primary market. This is a lot of what Microstrategy is doing, is it's issuing a lot of these convertible bonds. So I was sitting in the investment banking function, syndicating these bonds to the hedge fund managers and the other investors that would invest in them, from pension funds to outright CB funds as well, a bit like mutual funds, and then dealing with those in the day-to-day transaction of their convertible bonds. So just to give you a quick rest of my background, Lehman happened in 2008. At that point, Lehman was acquired in Asia by Nomura and in Europe. And we ended up integrating a lot of their businesses with ours and building out new businesses. So Nomura was not very strong in derivatives at the time. Lehman was very strong, but obviously we were the number one house in convertible bonds. So I ended up in this sort of hybrid position, running multiple products, where I was looking after both derivatives and convertible bonds, futures and options, and Delta One. And so then I moved to Hong Kong in 2009, carried on building the business and optimizing it. And then in 2017, I decided that I wanted to leave banking and try something different. Ended up in crypto. Was actually with a mining company that I'd invested in, and helped that company later on list on NASDAQ via a SPAC. I stepped down at the end of 2021, and basically joined Seize Capital at the end of 2022 to look after the hedge fund business here. We also have a fund of crypto hedge fund products, so keeping very close to the industry, which I guess answers your question. Why am I someone that can speak about MicroStrategy? I suppose I have the convertible bond background. I also have the experience of being a CEO of a NASDAQ listed company and understanding the ATM function, which is not something that is prevalent here in Europe. Most European investors don't actually understand what an ATM is, so we can probably talk about that in some detail as well when you want.
Yeah, great background and great backdrop after all. Yeah, that's exactly. Thanks for sharing your story. So I want to come back to this ATM, what it actually means, to convertible bonds as well. But maybe for folks, there might be folks who are not that familiar with MicroStrategy after all. So can you quickly summarize what's the story here? Why are we even talking about this random company,
Yeah, sure. So in 2020, and interestingly, Michael Saylor, who is the CEO and chairman of this company, was on Twitter in 2013 and told everybody that Bitcoin will go the way of online gambling and become a nothing market. He had the humility to change his position on that. And in 2020, he was sitting on top of a company, just seeing the amount of money that was being printed and saying, I've got $425 million on my balance sheet, and I can just see that the US government is just debasing that money. And if I'm sitting in bonds, then I'm just captured into that debasement. And so in May of 2020, he went to his shareholders and he said, look, I want to take the company's money and I want to put it into Bitcoin. And he spent time obviously educating his board prior to that to get the approval for them. But he's in a unique position where he was the largest shareholder, and he was CEO and chairman of the company. So he had an element of control that you don't normally see in NASDAQ listed companies. Obviously, there's a much more diverse governance structure that you would see in a NASDAQ listed company. But he had a lot of control. So he was able to sort of force this through. What he then did was go to shareholders and say, look, if you want to continue with me on the journey with this company, then great. I'm going to be implementing what I'm calling this Bitcoin strategy. If not, I'll do a share buyback. And I think $75 million worth of shareholders at the time ended up taking a share buyback. And so he ended up buying around $400 million of Bitcoin. And then he got to a point of saying, well, actually, maybe I could raise money and buy Bitcoin, because his company was trading on a premium to the balance sheet that the Bitcoin was sitting on. And he was like, okay. So he ended up issuing a bit of money, a bit of equity, and ended up now where we're at, where we're running with a huge amount of issuance that has happened and is happening. And he's created this essential flywheel to the company where the more that he issues, he's actually able to buy more and more Bitcoin and create more and more value for the company. And looking back to where he was in May 2020, he was sitting in a company that was really struggling to show much growth. It had been $1 billion market cap for ages and ages, and it really wasn't going anywhere. It was a software consultancy business. And, he was making $50 million a year. It was just turning over, but it was just not going anywhere. And so this was the moment where obviously everything changed. We're now looking at a company that has a 50 billion market cap in 4 short years. So been a remarkable story.
Yeah, exactly. I mean, it outperformed almost, I think, every other stock, which is like worth mentioning. And so it also kind of outperformed Bitcoin, and it's so interesting. I would like to zero in on what he's actually doing, because I feel like as you described this, in the beginning, he was taking his cash from the operating business, putting it into Bitcoin. But at some point, it grew more sophisticated in the sense that he is now issuing equity. He's issuing these convertible bonds. So maybe if we first, I don't know where to start. Is it better to start with the equity side or the convertible bonds, or is it like intertwined anyway? So what is he doing now with these more sophisticated instruments that he's issuing?
Well, perhaps if we start with the equities, then we can sort of start where people kind of understand the most, I would say, and then step into the other potential instruments that he's got at his disposal. So first of all, I think it's important to understand what an ATM is. An ATM is an issuance mechanism that you can use in US markets. It's unique to US markets. And it basically means that if you are a company that is trying to or has regular needs for fresh capital, you can just sell fresh shares into the market and they immediately become tradable. It's called an ATM at the market mechanism. So you can file for a year in advance, say, I'm going to sell $500 million worth of shares. And if one day your share has a huge price spike, then you can go, okay, well, I'm going to sell into that because the market is overvaluing my shares on this particular day. And even if you've done $1 billion of an ATM, or you filed an ATM for $1 billion, you don't have to do that 1 billion all at once. And this is important to understand because normally when you do an equity filing, you do the whole placement that day. And I think the use of the ATM is actually perfect for what Michael is trying to do with MicroStrategy. So if you think about the ATM as a mechanism to create more value for the shareholder, that's non-intuitive, right? We're investors. We look at equities. We go, okay, if you're diluting your equity, then you're, increasing the amount of shares. You're debasing the value essentially of the shares, right? So what he's doing is he's actually adding value to the shareholder. And maybe what we need to do is just talk about the phenomenon that has transpired. So you look at MicroStrategy and you say, okay, this is a holding company for Bitcoin, right? But it's not, because it's not one for one. So people are looking at it and going, okay, he can create value by printing money essentially and buying more Bitcoin. So he's, whatever way you want to look at that, some people call it a speculative attack on the dollar. Other people talk about it as being a sensible way to manipulate the capital markets to acquire the hardest asset that's ever been created. So what's happened is that people have attributed more value than the underlying Bitcoin to the company. And today we're sitting on a multiplier of about 2.5. So just to take easy numbers for people to just understand, let's say he owns roughly $20 billion worth of Bitcoin today. The market cap of the company is approximately 50 billion. Okay, so if you take those two numbers, you see that it's a 2.5 times multiple to the amount of Bitcoin that he has. So let's say he goes out and he's just announced that he's doing another 20 billion ATM. So he's going to issue another $20 billion worth of stock. That takes the market cap to 70 billion. But what's he going to do with that money? He's going to buy $20 billion worth of Bitcoin. So with a 70 billion market cap, he's going to have 40 billion of Bitcoin sitting on his balance sheet. Suddenly the multiplier has gone down and he's increasing the Bitcoin per share. So you've gone from a multiplier of 2.5 to a multiplier of 1.75. So that's if the stock doesn't move with him buying all of that Bitcoin, all right?
Mm-hmm.
So if he's done that, he's just added significant value to the shareholders. You can see how that is increasing the amount of Bitcoin per share, right?
Mm-hmm.
You see that?
Yeah.
So then what happens is, even if nothing happens, he's increased value for shareholders. But what's likely to happen is that multiplier will go back to 2.5. So if it goes back to 2.5, then the market cap has to go to 100 billion. And then you're looking at a 40% increase just from a share issuance, which is, as we said before, normally negative for the stock. So that's why you and I ended up talking, because I ended up posting about this on LinkedIn, the fact that this is just mind-blowing. This was the biggest ATM announcement in history of the capital markets. So 21 billion was announced. Bitcoin went down on the day and his stock price went up. So it's absolutely insane. And the point that I was making was that Michael has previously said that Bitcoin is going to break all your models, because as financial guys, we look at these things and we're like, okay, this is what we expect to happen. This is the model that we're going to be building out to assess pricing. But none of this works when you're dealing with a fully finite asset. And when you then compound that with a capital market strategy that Michael is implementing, then you've got a very, very interesting situation, which is, once again, breaking all of your models, which is what Michael said a couple of years ago to, I forget the guy, another hedge fund investor. So that's what happens. And then if you think about it, okay, we're now talking about $100 billion company. Okay. So who's actually buying all this stock? Well, once you get to that level of liquidity, he's now sitting in indexes, probably going to see his inclusion in the S&P 500. You're probably going to see him included in the NASDAQ 100. This is going to mean a lot more dollars starting to flow into his stock. And actually, I think already he's one of the top 10 traded stocks all day, every day in the US markets. So a lot more capital is going to end up being attracted, which means that multiple could go even further. And actually, Michael makes an interesting point himself, and this is my third point about the stock before we get onto anything else, but I just highlight, he mentioned this in his earnings call the other day, that if you think about what he is doing and adding, in this particular case, he's saying he's going to do this ATM over 3 years. He's also going to do a convertible bond set of issuances to the same amount, 21 billion over the next 3 years as well. So let's just focus on the stock. Just on the stock, he's adding $7 billion of this new asset every year. So he's increasing the asset base of the company by $7 billion a year. Okay. And so if you were to fudge that into an earnings model and say, okay, he's generating $7 billion of value, and you put that on a PE of, I don't know, Google's at 24, Amazon's at 46, Nvidia's at 69. If you put him on a 20 times PE, that's taking his market cap to 140 billion. So that's another 40% on top of the multiplier effect. So you can see how this all starts to model out to just continue to be accretive, because then when he's 140 billion, he can do an even bigger ATM. He can do an even bigger set of convertible bond issuances. And so this is just like this, escape velocity flywheel that we're starting to see.
Yeah, exactly. It's this flywheel that you mentioned, and I think such a good explanation that you have given here. So like if I want to unpack this and kind of summarize it in my own words, I feel like ATM, the word, for me as a regular guy, on the street means like a machine where I can get my cash, automated teller machine, But it feels like he kind of found this on Wall Street, where he can just go and print these like amounts of money, which are just like mind-boggling, But the question I have, it's like, it is because, as you said, there is a premium, to the stock. So with the multiple that you explained, that he can then consistently go out and kind of, okay, I dilute my shares, but it's going to be accretive because I'm buying Bitcoin with it. And then the underlying assumption is that it's going up in price, and that's why probably then also in the first place, a lot of holders or like investors flocked into MSTR, so the MicroStrategy stock, because they were seeing this and like, okay, there's a mismatch. And now we have this continuous premium, as we mentioned. And as you said, then when all these indexes come and they kind of have to start buying because he's meeting these criteria now, this just creates an ever greater flywheel. So is it the case that the assumption really is that Bitcoin is going up, or would you say even if everything stayed flat right now, it would still be accretive?
Yeah, I think if Bitcoin sort of started stagnating, you would see a decrease in the amount of volatility, and this would diminish his ability to be able to do this to this degree. The wonderful thing about Bitcoin he highlights is the volatility. He talks about this as some level of kinetic energy that allows him to create more value for his shareholders. So Bitcoin has a volatility of, let's say, 50. MicroStrategy has a volatility of, let's say, 100. And that's what brings us on to the convertible bonds, because convertible bond investors are there for the volatility predominantly, right? So if you think, and I'll explain this to your audience, is how does a convertible bond arbitrage investor operate? They're looking at buying bonds that are trading at an implied volatility lower than what the actual volatility of the underlying stock is. Now, if you're an investment banker and you go out and you try and sell a bond at 100 volatility, which is what MicroStrategy is, no one's going to buy it because you've only got downside, right? If the volatility starts decreasing, you're going to end up just getting absolutely carried out. And this is a long duration product. So this is a long vol option, which means that your volatility risk is quite high. So the higher volatility is on an implied basis, the more you have to fall, and therefore you don't want to be paying a high vol for this. So even though he's got a very high volatility, he's not selling it anywhere near the realized volatility. He's selling at an implied vol of maybe 40. Even 45 would be the highest I would say that he'd probably be able to get these out of the door. But what's happening is if you're a volatility arbitrage player, you love that because you're buying these at a massive discount to the actual realized volatility. So what does that mean? That you're sitting there all day long just trading gamma, which means trading gamma means that you're buying the stock when it falls, you're selling the stock when it goes higher, because remember that payoff profile of the convertible bond. As the stock goes down, it becomes bond-like. So while your delta goes to zero, your price is protecting. So the stock's going down and down, you're getting less and less exposed to the stock. As the stock goes up, you get more and more exposed because it becomes more and more equity-like. So remember, you've got a long CB position and a short stock position, right? And so as it goes up, you're getting longer and longer because the stock position is staying the same, but the value of the stock is getting higher and higher, pulling the delta of the convertible bond higher. So maybe this is a little bit of a deep rabbit hole to be going into, but I just want to explain that essentially what you have here with the product is something that is trading at a massive discount to the absolute volatility, and that's where it's being offered. So people are just lapping up this paper, and convertible bond markets have been quite quiet for the last few years. It's been hard to get issuance, and people really want that issuance because obviously now that you've had interest rates go up, you've started to see a lot of issuers like Microstrategy who don't want to pay those high interest rates on their straight debt, look at a convertible bond and go, okay, I can issue something with an embedded equity option, and that massively reduces my coupon. So now you're starting to see a nice amount of issuance, but also demand from these hedge fund investors who are trading the convertible bond arbitrage.
I see. Okay. Yeah, because that's what I was asking myself all the time. Why are these interest rates that he's paying on these convertible bonds, they're so low? Like some people were like, oh, I would like to imitate or emulate Michael's strategy, like personally, but then everyone was like, yeah, but as a normal person, you don't get the interest rates that low anytime soon, and so you're now telling me, okay, this is exactly because of this, that he's now getting these really low interest rates, and then again, if I summarize this in my own words, I feel like, okay, with the equity, he has like this premium where he can then kind of arbitrage this, and on the convertible bond level, there you said again, it's this discount in terms of volatility that he can take advantage of, and so it's this very balanced out strategy, so to say. So that's very interesting, yeah.
But just think about what the convertible bond is, right? So equity, you're selling it at the market price, right? The convertible bond, even though you're selling it at a discount volatility, the implied volatility takes you to a strike price, a conversion price on the convertible bond, where this bond converts into equity at a much higher premium to the actual market price. So he's locking in a price above the market. So he's selling at, let's say, a 40% premium, or even 50% premium. I think he sold his last one on 50% premium to the market price. So if his stock's at 100, he's selling a convertible bond with a conversion price at 150. So it's only at 150 that stock becomes convertible, which means, coming back to that example before of how he's getting more Bitcoin per share, he's doing this with convertible bonds even more so, right? Because if you think about, let's go back to the example of the ATM, and sorry to just keep breaking this down, but I think it's important, and it's often hard for people to get their head around. So let's say the entire market cap of the company is 100 shares, just for simplicity's sake. And he holds on that ratio about 30 Bitcoin. So he's got 30 Bitcoin, 100 shares. Let's say, for the sake of simplicity, that the share price is one Bitcoin share price. So 75,000 today. So the shares are trading at 75,000. Bitcoin's trading at 75,000. He has 30 Bitcoin for the 100 shares. He then issues another 100 shares and buys another 100 Bitcoin. So he's now got 200 shares outstanding, but he's got 130 Bitcoin. Right? So that's what's happening with the equity, right? With the convertible bond, it's even more so, because the premium of which he's striking those shares is even higher. So essentially, he sold the bond, the money out there, and then the conversion price for the equity, the dilution of the equity, only comes 40, 50% higher. That's the moment where the shares get issued. So you've got this even higher multiplier effect to the amount of Bitcoin essentially that is coming in for every new share that is issued. Does that make sense?
Yeah. I mean, it's kind of hard to wrap my head around, because I'm not this like familiar with options, obviously, and bond, because like that's what I would like to ask you as well, because I heard these two terms in that like strategy. It's convertible bonds, and I feel like I'm kind of understanding on a high level what a bond is, but then there was always also this term convertible options, and I think Is it the same in that sense, or like where does this come in? Like that was kind of something
I think options are a different thing. I think that there's no such thing as convertible options. So I think maybe somebody would refer to a convertible bond as it's got a convertible option in the convertible bond, but it's not. That's not a separate product. So convertible bond is its own product, and options are a separate product to that.
Yeah, I feel because that's where I was hearing this, that some people say with these convertible bonds that Saylor is issuing, it's almost as if there is like a call option embedded in that debt instrument, you know?
That's what a convertible bond is. That's exactly what a convertible bond is.
And that's what
so you think about it, it's a bond, right? So that will have its own credit priced in. So whatever the market is assessing for his credit. And by the way, as his market cap keeps increasing and the amount of Bitcoin he holds keep increasing, the credit worthiness of $1 billion convertible bond just gets better and better and better, right? So that bond floor that you have on a normal bond, let's just break the convertible bond down into its two components. You've got the convertible bond, the bond has its own bond floor, right? And that's defined by the credit. So as the stock goes down, the CB stops at its bond floor, so the price stays stable, right? Whereas when the option kicks in, once you get to that 150 price or the conversion price, which is 150% of where we are today, then that becomes more and more equity-like, right? Because it's got that embedded equity option into the convertible bond. As I said before, it's a hybrid instrument, and it changes between those two instruments around the conversion price.
Yeah, exactly. Yeah. No, I think I get this. I mean, some people were also kind of questioning this strategy, like you have the naysayers, you have the haters. And obviously when bonds come in, it feels like some people are saying, okay, MicroStrategy is levering up here, because they still have these bonds outstanding. And then they have these coupons that they have to kind of pay back when they come due. So my question is there any type of liquidation risk here as well? And how likely is it that this trade could unwind and truly, fly in the face of the entire Bitcoin and crypto industry? Because one thing that I was, again, as a layman, when I think back at the 2020 or 2021 bull run, we had GBTC, and as I understood it, there was also GBTC was firing up the bull run because there was this constant premium, to the product. But then at some point, I think this was around 2021, sometime when Bitcoin, in April, when Bitcoin's price kind of stalled, this kind of reversed, and then all of a sudden you had this big discount to GBTC. And I think this also kind of brought a lot of these holders into some problems or trouble. And so I was wondering, is it a total different mechanism, or could we be seeing, or is my question basically is if there would ever be some sort of discount to this operation, as we said, when it comes to equities, could this be a problem for the strategy after all?
Yeah, look, I'm not going to say this is not without risk. This is a strategy that is highly, highly risky. And I think the majority of NASDAQ listed or NYSE listed companies would really struggle to get a strategy like this over the line at this point in time. Now, obviously what Michael is gunning for is, he wants to make sure that as he builds the company, he's always watching where the lowest price for Bitcoin potentially, in his view, let's be clear, could be, because as you rightly say, he's got debt servicing to deal with. And those convertible bonds, if they don't convert, they are debt and he needs to pay that money back, right? What's interesting is that he's quite adept at timing the market. So now we're looking at a new all-time high of Bitcoin with sort of 75, 76,000 today. This is around the time the way you'll probably likely see a new issuance of convertible debt from Michael. Now, bear in mind, because the conversion price of the bond that he issued way down here at 30,000 is now hitting, it's way in the money because his conversion price is probably 45,000. I haven't looked at the various different conversion prices of the converts, but what you have to imagine is he's looking at all of that debt and saying, okay, this one is done. Like, people are going to be forced to convert now, because imagine that you're holding a short in the equity and, there's the stock's trading at 300% higher than your conversion price or whatever it is. Then you're looking and you're going, okay, I'm basically funding a put trade, right? I'm praying that the stock is going to have a huge crash, but it's quite expensive as well, right? I've got to fund that. I've got to hold the bonds on my balance sheet. I am getting paid somewhat of a coupon, but I'm also short the stock. So the carry of it is going to be costing me money. And I've got to think, if things keep rising, maybe I just start converting this thing because I'm running out of time anyway. I've got to convert it, right? Because then that takes my cost off the table. So the more that those lower strike bonds convert, that opens up his ability to issue more paper, right? So it's why as Bitcoin goes higher and higher, you're likely to see more and more issuance from MicroStrategy, right? And I think, sorry, just one thing I just wanted to come back to highlight, just so that people watching would understand this, because you made a very good point that you don't understand why he's able to issue debt on such a low coupon. And of course, the reason is he's embedding that cheap option in the paper, which is saying, okay, well, look, I'll take this paper at a normally interest rates I would be charging this company are going to be 6-7%. But actually, because that option is so valuable, I'm only going to ask for 0.5% or 1%. Right? I think his recent issue was just under 1%. So he refinanced his debt obligation, which I think was like 5-6%. And he did that with a less than 1% coupon on the convertible bond. So massively improving the cash flow and capital structure of the company as well. So he's obviously managing that outstanding debt very carefully. And he wants to switch, I would say, all his straight debt into convertible debt, because that the straight debt needs to get paid back. The convertible debt can get converted into equity as the price goes higher and higher. But then, just to come back to the other thing that you mentioned as we started talking about this, was premium and discount of GBTC. So just as a reminder, GBTC was this trust structure pre-ETFs that we had on the US market to essentially trade Bitcoin in a wrapper, which is what IBIT, FBTC, all these Bitcoin ETFs are today, but it didn't have a redemption mechanism within it, which meant that if Bitcoin started to sell off, then people would want to potentially sell out of it, and they couldn't monetize any discount. So it could end up trading at a very deep discount. What also exacerbated that problem was that GBTC was used as collateral in the lending markets. So as you saw, Voyager, BlockFi, Celsius, even FTX, and even Three Arrows were involved in this, go down, then that collateral just got sold aggressively in the market, which forced this very deep discount. Now, could MicroStrategy start trading at a discount? I think there's a possibility if you started to see Bitcoin drop to a level where his debt obligations are clearly too high for the company. You see that he's going to have to sell his Bitcoin, and that's going to lead to an even larger sell-off in the company. So there is risk with this trade, which is why there's so much volatility with his stock. But that obviously, when Bitcoin's going up, is a very interesting leverage trade into the space.
Yeah, it's so interesting, and obviously, yeah, there's always risk probably, but I feel like Saylor is really this master at financially engineering this, and I mean, he's already gone through probably one bear market, 2022, and then people were always calling on him and like, okay, he's gonna get leveraged, and I think he was just fine, but yeah, obviously we have to be aware of the fact that there is risk. I was just, maybe one question is like, would it be any problem if any other companies would be starting this as well? Would then be like this also premium maybe kind of be arbitraged away again? Or because I feel like or is it the case that that Saylor was just so great at kind of Bitcoinizing his company and stock, and it's kind of like this once in a lifetime thing that we are not going to see anytime soon? Or what is your feeling there?
I think we're going to see it more and more. I think what Saylor's managed to do by being one of the first out of the traps is actually make his company the largest that will likely ever be able to do this. You're not going to see Apple or Google or Microsoft put their entire balance sheet into Bitcoin, right? So he's already running so much faster ahead of anyone that might be trying to chase him. So to your point, when we talk about credit risk and we talk about that discount risk as well, the fact that he is going to be soon, potentially included in the S&P 500, he's likely to be the biggest company that's doing this. And so I think that means that you will always put a higher premium on MicroStrategy, so premium to the holdings, than you would for a Semler Scientific, let's say, or another company that's looking to implement this. Interestingly, one of the things that always surprised me about, working in modern traditional finance markets was that there was still ridiculous inefficiencies and still, there's very limited places that certain capital can go. If you're a convertible bond arbitrage manager, then you can't buy MicroStrategy stock, but you can buy the convertible bond, right? Equally, there's a company in Japan called MetaPlanet that is the only company in Japan implementing this strategy. And I think when I bumped into the CEO at Nashville this year, his company was trading at a 12 times multiple to the Bitcoin that he was holding on his balance sheet. Because, Japanese investors, the Japanese pension fund, for example, TGIF, they are essentially only limited to a certain allocation into Japanese stock. BOJ is always buying Japanese stock. So you have this large pool of capital that's always coming into Japanese stocks. And I think this is really important, is when you start to understand market segmentation, and there will likely be a MicroStrategy in most developed market stock markets, because they cater to this need and want from the market to have this. If you think about what MicroStrategy is today, Bitcoin treasury optimized company, right? It's not an ETF. It's optimizing. You made the point earlier. You can't yourself issue debt. You can't issue debt on Pascal converting higher, which means your coupon would come lower, right? If you want to go to the bank and get a mortgage, you're going to have to collateralize that with a house or an asset, right? You can't do that with just saying, I'm going to convert my own brand value and my podcast value into stock, right?
Yeah, I see. And this is maybe my last question. Is this also where the rationale comes in for buying this MSTR stock? Like people who say, okay, I can't really myself follow this strategy as an individual. Maybe my company is also way behind MicroStrategy. We will never be able to catch up by Bitcoinizing our company and our stock, so I might just as well buy MicroStrategy. And in that way, I indirectly or even directly can sort of participate in this. Or like my question is, who should be buying MSTR, MicroStrategy stock, or who should be just staying with Bitcoin? That's maybe the final question I would have.
Look, I'm not going to tell anyone that they should buy a stock, but I think, if you look at, for example, the Swiss National Bank. So the Swiss National Bank has exposure to certain stocks. I think out of all the banks in the world, they run probably the most sensible strategy within their allocation for their central bank and backing of the currency. And they actually own MicroStrategy stock. So it's a way for them to have exposure to this play without going down the political route of having to explain necessarily. And I don't think they have to explain, but the risk of dealing with Bitcoin as an asset or having direct exposure to a Bitcoin ETF. pension holders in the UK are banned from having any type of Bitcoin exposure, but they can buy MicroStrategy stock in most instances. So you think there are certain, coming back to the issue before, buckets of capital that can't really access Bitcoin. That is going to potentially be a way that people will access it, is via MicroStrategy. I think many Bitcoiners that I know have an allocation of some type to MicroStrategy because they see that in a bull market as being a leveraged play into Bitcoin, which means they can get more Bitcoin, right? So if you have a Bitcoin stack of, I don't know, let's say 50 Bitcoin, and you put 5 Bitcoin of that into MicroStrategy stock, if it continues with the level of compounding that you have, then you might end up in the end of 4 years with, 55 Bitcoin, right? Mm-hmm. So, I mean, that is a, different type of investors that are looking at it. But I would say the interesting thing is that this is bringing in a lot of traditional finance investors. You think about the convertible bond guys, imagine all the convertible bond desks that are out there in investment banks that are now trading this product, all the hedge funds that have convertible bond arbitrage strategy that have all had Bitcoin thrust in their face by MicroStrategy and what he's doing. Everybody's seeing it firsthand, that this is just having such a huge compounding effect. He took his company in 4 years from a $1 billion market cap to a 50 billion market cap. Mm-hmm. Like everybody is paying attention now within those small segments. So the hedge fund guys, the convertible bond arbitrage guys that are sitting or making markets in traditional investment banks, these people are saying, okay, what the hell is happening here? Mm-hmm. So it's opening the door to a lot more adoption, I believe, of Bitcoin as an asset.
Yeah, exactly. And that's what I think MicroStrategy has been about all along. I mean, he's been doing, like Michael himself, so many great educational podcasts and everything, where people can learn about Bitcoin and now potentially also about the financial system. And as you said, I mean, he's really dumping these things onto the fiat system, and there's no way to go around it anymore. That's so interesting, Well, Richard, thanks a lot for this really, really great explanation. I mean, I haven't maybe gotten everything myself, so surely have to re-listen to my own episode again, but I feel like there's a lot of chance that people can kind of study this furthermore and just kind of be educated on what's happening here. So thanks a lot for this. Maybe my last question would be, and I ask this question to every guest, is there any high signal person that you can think of that we should be talking to anytime soon? Anyone that comes to mind?
I think Jeff Booth is always someone that I recommend people talk to in the Bitcoin space. I had him on my own podcast, which is called Seize the Future. He was one of my early episodes, and I would say he is absolutely fantastic at explaining what is broken within our financial system and why people need to start giving their energy to Bitcoin, which you're doing, which I'm doing, in their everyday life.
Great. Yeah, it's so cool. Jeff Booth already mentioned to me twice, so I definitely want to get him on the podcast at some point in time. So this is going to be neat. Well, Richard, thanks a lot. Yeah, as you said, like your podcast, we'll certainly link to it in the show notes. We're also linked to your Twitter profile, LinkedIn profile, so people can interact with you. So thank you very much for coming on, and hope to see you soon in real life again.
Thanks, Pascal. Thanks for having me.
Thank you, Richard.